Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to your weekend's deep dive. I'm going to be showing you all of the positions we got. Going to be doing a deep dive on the TA as always. Talking a little bit about the wider expectations I have for the market over the coming, let's say, few months. And without further ado, hit that like button, let's get into it. The highlight of this week, of course, was we saw FOMC, wherein the Fed decided to hold rates. Not really a surprise, that was pretty much priced in. So happy days, onwards and upwards we go. The Fed was kind of dovish, right? Kind of accommodative, or more accommodative than many were expecting. It did confirm it wants to do a minimum of 3 rate cuts this year, and that is the expectation. And when we use the CME to check the probabilities, we can see that with a almost 90% probability, we're going to remain paused at May's meeting. But clicking out to June, you can see we're currently sat at around 75% probability that we will see cuts as early as June. And clicking out to July, you can see that we are sitting just below 90% probability that we'll see cuts by July. So it seems like we are getting closer and closer to actually seeing rate cuts now. And of course, the jury is still out on whether these are going to be cuts into normalization and thus the stock market can continue to run, or whether this is going to be very much like history in that when they begin cutting rates, it historically marks the top of the stock market within a 0 to 2 month time frame. If you're unfamiliar with this concept or you want a bit more detail, I do have a video here called Rate Cuts Are Bearish, Here's the Proof, and this is from about a year ago. So you can go and check that out if you're in this camp of people that thinks that rate cuts can only be bullish. So I kind of disprove that in this video. You can go and check that out if you're interested. We have been doing pretty well until the last couple of months at tracking inflation and staying on top of the inflation game. We've been using Trueflation as our metric. This thing seems to have fully broken down now. Okay, it's added almost a whole percentage point onto what it was showing just a month or less ago. And for the first time, we've seen major divergence between the official government reported rate and Trueflation's reported rate. So it was really, really useful. But as ever in trading, things can be useful for a while and then they can just stop being useful. I think that's where we are with this. Overall, it has kept us largely on the right side of the market. We had this call that we would run the all-time highs, and so far we have done that. We do seem to be heading towards this final blow-off top portion of the rally. We have, of course, set at least one angle here, and arguably two. Now, whether we have to have some kind of pullback first and set slightly less of a steep angle first, or whether this is our second angle, and therefore we should expect at some point in the not too distant future a third and final near vertical angle, it does seem to me that we are in the middle of this parabola, or sorry, we are closer to the end of this parabola than the middle now, and what should be left is the straight up vertical or near vertical portion. Of course, if we do get a near vertical portion, parabolas do tend to break down, and when they do, they tend to break down violently. I have been speculating that this will come as part of a deflationary bust. This will come as part of a global recession. I've also been speculating that it will be the rate cuts that do trigger this, in line with that video that I was just talking about where rate cuts are bearish from over a year ago. I've also been speculating that Congress will be banned potentially from owning stocks here. And the entire reason I say that is because we saw the same thing with the Fed at the top prior to the 2022 bear market. They let the Fed out for quote unquote ethical reasons. Okay, they said it's not really ethical that they can insider trade. They let them out and it turned out we had this big bear market. I speculate the same thing's going to happen. I speculate that we're going to get up here, Congress is going to be banned because it's unethical to let them insider trade, and then we're going to have this big global deflationary bust with a global recession. And of course, I am open to being proven wrong. I am open to seeing this thing trade sideways or pull back significantly from here, in which case then we can just say perhaps we're not going to have a blow off top, perhaps we're just going to maintain the overall uptrend with dips along the way that the stock market is well known for. But as I'm about to show you, the writing is on the wall as far as I can tell that we are going to have to at least entertain and be open to the idea of this deflationary bust and a global recession. At the weekends, we typically come here and check in on the high yield spreads, the credit spreads, and as you can see, we continue to compress, right, down to the hard right edge, not looking anything like a financially stressed set of conditions yet. But anyone that has been in trading in markets for a while knows compression or volatility precedes expansion. If we do get an expansion at some point, then it is likely going to be quite a violent set of expansion, just like we had back here, and that is synonymous with financially stressed conditions. We also saw the House come out this week and pass another $1.2 trillion of government funding packages. So even more debt, okay, another day, another trillion. This year is going to be wild. What a wild time to be alive. And I suspect this thing is not going to be slowing down anytime soon. Speaking of debt and feeding into this narrative of seeing a recession in the not too distant future, what I have here in orange is interest payments by US households. And in the histogram or the bars, the white bars, that is the mortgage payments. So I want you to ignore the orange line for now, okay? We're just going to focus on mortgages. Mortgage interest payments continue to rise. This, of course, means the average person has significantly less disposable income because they have to service more of their interest payments on their mortgages because of these rates continuing to be held up for longer. Going back to these non-mortgage interest payments, you can also see these are spiking. And if we hop in and take another look at this on this chart right here, this is the blue line, okay? You can see personal interest payments are skyrocketing. Now, why is this so important? Because as I was saying with mortgages, when people have less disposable income, right? When people have to put more of their money into servicing interest payments, then there is less money available to move into the economy. This is what usually precedes major recessions. We are seeing less and less money available to go into the economy because everyone has to pay the increase on their interest for their mortgage and other types of debt. Here in the blue, you can see we have interest payment as a percentage of disposable income. And you can see if I draw your attention down here, this is the fastest increase since the 1950s. And yet we are seeing people talking about a soft landing. I don't understand how we can have a soft landing. It seems far more likely that we are indeed going to get that recession show up in the not too distant future, particularly if it is coupled with this blow off top. Why? Because things that go parabolic must eventually come down. The higher up and the more ridiculous it is to the upside, the more likely it is to come down in a violent manner. Not to mention, it is small businesses that drive the US economy. Small businesses employ nearly half of the entire American workforce and represent just under 45% of America's GDP. So what we have here in blue is the Small Business Optimism Index, which is a composite of 10 seasonally adjusted components. It provides an indication of the health of small businesses in the US. And if I draw your attention to here, okay, here, and here, looks an awful lot like what we've got today, doesn't it? So again, tells me to keep an open mind about seeing a recession in the not too distant future in line with that deflationary bust idea. And all of this likely tells me that something is going to break. They are going to be forced to cut rates pretty soon. And that's why I don't think we're going to see cuts into normalization, which of course the stock market can continue to rally into. I think what we're going to see is something break and the Fed be forced to cut to try to accommodate markets. So as ever, one day at a time, open to all outcomes, open to being proven wrong, open to seeing sideways or down in the short to medium term first. But as ever, we continue to take it one day at a time, and this thing is right until it's wrong, particularly if it starts to get more and more violent to the upside. Over in the world of Bitcoin and cryptocurrency, okay, we were talking about this earlier in the week as well. We were saying, now that we've got a pullback into that cycle low for Bitcoin, we're going to find out whether or not the ETF holders are able to stomach the volatility that is so natural to those people that are invested in crypto and Bitcoin. What we can see is that most of them have paper hands. Not only did they puke an awful lot of their positions from the ETF, but they also happen to sell right into what is currently a cycle low. They managed to sell right into the bottom of this move, assuming we do not violate the current cycle low that is in place. So as always, we'll get to the charts in a minute, but it's pretty interesting that every 60 days or so we get one of these cycle lows, and every 60 days we seem to be saying the same thing. They serve to flush out the excess leverage, they serve to reset sentiment, and they serve to get the people that don't know what they hold out of the market ready for that next leg higher. Bitcoin doing Bitcoin things and cycle lows doing cycle low things as always. From ETFs to Asia, Asia is very, very bullish. You can see in orange here, this is the Asia year-over-year supply change. They are hoovering up Bitcoin of late. And all of this comes at a time when Bitcoin is right in the middle of putting in its parabola as well. All of this kind of fits with this big risk-on blow-off top moment I was talking about from the melt-up chart back here. All of this kind of fits with that narrative. It suggests that Bitcoin is getting ready to do Bitcoin things. Bitcoin probably has another 1 to 200% gain left in it before it is ready to violate its parabola. And as always, when Bitcoin violates a parabola, it tends to enter a severe drawdown period. So I don't want to talk about the implications of what happens when we break. First of all, I want to see if we actually don't violate this from here, okay? Let's see if we can continue to hold it. Let's continue to take it one day at a time. But if we get up into this neighborhood, then the focus will be for me to try to sell the top publicly, for me to try to get out as close to the top as possible. And once we've done that, then we will be sitting on the sides waiting to deal with whatever comes next, be it a double pump to new highs or a extended bear market period into that 4-year cycle low, which isn't due until the end of 2026. So as ever, one day at a time. But for now, let's see if we can hold this. Let's see if we can move up. And if we can, let's see if we can publicly sell the top. No easy feat, let me assure you. Nice chart here from Tony the Bull. Bitcoin top signal, 1 month Bollinger Bands. When the 1 month Bollinger Bands stop expanding and curl up, we have our top. And this is even more effective when the candle close back inside the upper band. Now, though, tells me at least to keep an open mind about seeing a few more candles to the upside. Like I said, I think we have another 1 to 200% to go before we actually see the top come in for Bitcoin. And so heading into the charts, it looks like the dollar is thinking about breaking out, doesn't it? It looks like it may well want to confirm this as an early 3-year cycle low, or slightly early. It is legal and qualifying. I was hoping that we'd have one more drive lower. Seems to me like it wants to confirm an early cycle low. The only way this can be invalidated now is if we see a hard rejection here and a continuation to the downside. But for now, at least, it seems to be thinking about breaking out. And if it's going to do that, that's fine. Like I was saying, we can see the dollar run with risk for short periods of time. If the dollar is going to strengthen here, though, does that start to feed into this argument of seeing deflation? Perhaps. Strengthening dollar, of course, characteristic of deflation. It will also be really interesting to see the 10-year bond yield. Does this turn into breakout retest resumption? Okay, breakout retest resumption. Or have we just seen a double top here and here? Are yields now getting ready to move lower in anticipation of those cuts that are coming possibly as early as June or July? And is this going to ignite a risk-on moment for the stocks, for Bitcoin, for cryptocurrency? And is this also going to cause the Dixie to reject a resistance? So that's something we're going to need to check in on next week. For now, we can think of it like this. Breakout, probably going to pressure risk assets. Break down, probably going to fuel the remainder of this blow off top. The stock market has been relentless. It seems like we have a little bit higher to go perhaps before we can start to get that decline into a daily and weekly cycle low. As I've shown before, I know I'm calling for a blow off top and a weekly cycle decline at the same time. But really, if we zoom all the way out, all it will look like is this. Let's assume this yellow squiggle plays out. Then it will just look like this, right? We've got our first angle in red, our second angle in red, and then at some point in the not too distant future, we'll get that third near vertical angle. So whether that comes from where I've got it, which is right around here, or whether we go a bit more right translated, meaning we top slightly higher up and then pull back more sharply, that's to be determined. But for now, we are getting dangerously close to seeing a daily and weekly cycle low. If I'm flat wrong about this and we keep going like this, and then we just get a shallow pullback into a daily cycle low, then I think I'll be buying here, ready for the final attack higher, and we'll be shifting this weekly cycle count over by another daily cycle. So as always, open to all outcomes, flexible, not married to any kind of narrative or bias, willing to pivot my stance if the market tells me to do so. It's the exact same analysis on the NASDAQ, right? Either we're going to reject here and start to make our way down to that weekly cycle low. We'll adjust this trend line to encapsulate that to set our second angle, and then we'll be looking for the third and final angle. Or we're going to keep trending up for another week and a half, then we'll decline into a daily cycle. We'll look to get long there and play the final section. We did the right thing by keeping some exposure to the equity markets in the form of this Dow long, so we're continuing to push this. Stop is choked up. And again, we'll continue to push this until it becomes unreasonable to do so. I also kept some exposure to the US equity markets via the Russell 2K. And so far, looking like Wyckoff accumulation, and this is the phase E before that breakout. That's a lot like what this seems to me. We could make that more simple by just saying we've got a range break in blue, and we're looking at breakout retest resumption off of this. But this is all pointing to me like what we're going to see next is something like this. And of course, again, all of that fits into this blow off top narrative before, of course, we enter that global recession. Going to be a big week for the precious metal markets because gold has so far confirmed a daily cycle low and has held above it. So all the while we're above it, then I'm happy to continue to push longs. I'm happy to continue to expect further upside before that next daily cycle low. But if this thing is going to roll over and undercut the cycle low, then I need to cut this position. I'll probably cut the other positions that I have open in the members section. I'll cover that in the members only video just after this one. And it'll be time to sit on the sides again and wait for the next daily cycle low to think about attacking again. As it stands though, this is a valid cycle. It is not yet failed, and thus it tells me to keep an open mind about seeing higher gold, silver, and minor prices walking forward. Like I said, as soon as we lose this level, I want to be cutting trades and getting out of the way of it. In fact, I think what we can do is choke the stop up to just a little bit below the cycle low, because like I said, if we trade below that level, then we've got a failed cycle and we just want to get out of the way of it. So no harm, no foul. We've got some profit here. And last but not least, the ball of all balls, Bitcoin. Okay, so what have we got? Okay, you probably already know the situation by now. What we've got is so far a valid day 57 cycle low. That's what we've got so far. We don't need this anymore, I don't think. We'll get rid of this. And I don't know what that's doing over there. It's probably from the live stream, I think. But what we've got is clearly a valid daily cycle. Similarly to gold, until we take that level out, okay, the cycle is indeed valid. We have still got a valid cycle low, and it tells us to keep an open mind about seeing higher prices walking forward. Whilst we're in this timing window, it doesn't preclude a move lower to see something like this. Then we would end up marking that as a 62 or 63 day cycle low and expect resumption of the primary uptrend. But for now, difficult for me to worry, difficult for me to get stressed about anything, all the while we hold above this low. And of course, we are holding above the blue support as well. So I remain bullish bias, remain open to seeing further upside. And if we can get some kind of push, which I expect to see in the not too distant future, something like this, you can expect me to add a long for Bitcoin with a stop below this cycle low. And that will be a third supplemental trade position on our way to what I believe will be somewhere in the 85 to 90K region before we get a significant pullback. The crypto-related equities, we took a partial profit on Coinbase, so sitting in a position of power. We've got plenty of exposure left in case this thing is to tear off higher, which to me, it kind of seems like it wants to, right? Seems to have also confirmed that cycle low back here in line with Bitcoin's 57-day cycle low. So happy days. It's trying to break out, right? It's kind of right into resistance and support all at the same time. So we'll see what happens. But if this thing can continue higher, then I think what we'll do is we'll adjust this to encompass that wick from back here. And this becomes our new line in the sand. And we'll see if we can push this thing higher. It's pretty much the exact same analysis applied to MicroStrategy. Very nice candidate for a swing here. Trying to break out retest resumption of the downward sloping blue resistance line. We took a partial, so again, we're sitting in a position of power, got plenty of dry powder ready to deploy into Bitcoin and other miners should I see nice entries and setups. And again, if we're going to push off of here and continue this uptrend, then we will move this to encompass the wick from back here, and this becomes our new line in the sand. That becomes our new sell angle. And I actually kind of like this as a setup because the more vertical it is, right, the harder it is to deal with and the more prone to failure these are. But if we are able to reset this and start to hold above here, then that is a much nicer angle to deal with. Tells me that we'll be able to get out much closer to the real top once this thing actually tops. So as ever, one day at a time. So far though, happy to lock in some gains from way lower down. Happy to still have plenty of exposure going into whatever is left to come. And I still remain heavily bullish bias Bitcoin and these crypto stocks. Here's Riot as well. So we got another position. Currently sat in a little bit of unrealized loss, but that's not the end of the world. All the while we're above the supports and we haven't been stopped out. The trade is valid and I expect to see higher prices. The exact same thing is true of Marathon. So all the while we're above the supports, I expect to see this thing start to rip, especially once Bitcoin has confirmed that cycle low. I just think it needs a couple more days to do so, and then these things should fly. I think even in the worst case scenario, if I'm stopped out of these positions because Bitcoin has to do a second drive lower, right? Let me zoom in so we can be clear. If Bitcoin does something like this, okay, and maybe one or two of those positions get stopped out, but I'll just add them back on the swing when I add Bitcoin back as well. Now, I don't think that's likely. I really do think this low is going to hold for now, and thus I think those positions are going to be fine. But again, right, this is why we size our trades appropriately. This is why we manage the risk, and this is why we don't let our emotions get in the way. You know, if we have to take a couple of stops before a big move like this, then it's not the end of the world. Like I said, though, I do think these positions will be fine. I do think we're going to see a nice strong push off over the coming week or two, particularly if the Bitcoin market is going to do what I think it's going to do and that stock market blow off top is going to play out, right? If all of this is the backdrop, then things should be pretty bullish in the short to medium term. So again, if you haven't seen this, which you probably haven't because it's only got 182 views, go and check that out. Okay, I did quite a lot of work on why rate cuts are typically bearish, particularly if we've got the backdrop that we've got at the moment. So go and check that out. Let me know what you think. In the meantime, I hope you're doing well in life. I hope you have a fantastic weekend. If you're a level 3 member, look out for a members only video. And until next time, take care from me. All the best. Cheers. Bye.